please let us welcome Mr. Borakam, partner at Mekong Strategic Partners, to deliver his presentation. Please welcome.
Good afternoon, everyone. So it's very needless to say why financial inclusion is important for the people in this room and online. Obviously, it's about the nation's productivity, it's about poverty alleviation, it's about inequality, not to mention long-term credit creation, capital accumulation. So all of these buzzwords are why we're here today for the most part. What I wanted to talk about here is what are the current fintech trends that we're seeing now, and how do we leverage it to increase and accelerate financial inclusion? To set the stage, I want to highlight a few data that was published via the NBC's Financial Inclusion Strategy 2025 report, which I highly recommend that if you haven't, please go out there and access a lot of the insights there. But the main headline, and typically we hear, oh, Cambodia's population is 80% unbanked. That's not fully accurate, as you could see from the top chart here. So if there's one piece of data that I want to dispel from this meeting is that, please don't use that data because it's not really accurate. The number is probably somewhere between 40 and 30% that are unbanked, quote unquote. You have 20% that are banked by the commercial banks. 42% are coming from the MFIs, but also the mobile wallets, the money transfer agents, and so on and so forth. 12% is informal, so it could be friends and family / gray market. And 30% are the number where nobody is getting any form of financial services at all. So that's kind of the big picture. So obviously the uptake on these financial services is significantly higher among population with higher income, urban areas. Surprisingly, male to female balance is actually quite balanced, so that's somewhat encouraging. It is a complicated issue, which really boils down to consumer literacy and financial literacy and awareness. Everything else, the technical pieces, which I'll go into a bit more details on, we have bits and pieces of, but it's how do you convince people with $50, $100 to put all their money in an institution, let alone an app. How do you do that? That is a thing that takes quite a long time. So if you look at the different segments, clearly insurance and transactions, which is mostly payments, are the most underserved by the financial services system, by the formal financial services system. For insurance, it's probably due to the infancy of that industry within Cambodia. For transactions, probably dealing a lot with the cash nature of that. So remittances, savings, and credit, around 60% that is not met. And again, that's partially due to the lack of disposable income for those in that group. I have to use a piece of paper because it's going to be a 20-minute data-heavy presentation. So all that's saying is that we have a lot of work to do, okay? In the report, so where do we want to be in 2025? The report is saying that by 2025, we want to double women inclusion of these fintech and financial services from 13 to 20%, to increase the formal use of financial services from 59% to 70%. So we think that actually these were quite ambitious when it was set, but now it's becoming more and more realistic when we see the conversion happening. So it's ambitious, but very, very achievable by 2025. What's the suggestion coming out of that report? Well, pretty simple. Encourage savings, promote innovative credit products, enable expansion of the payment systems, improve broader access to insurance, strengthen capabilities of regulation, add transparency, consumer protection. Very, very simple stuff, right? No, I don't think so. I don't think anybody in this room is probably going to agree with that. So, maybe the next slide. Where does fintech innovation comes in, and where are we now? As you could see from this report, that's going to be published soon, you see there's a lot of great progress for the upper half of the pyramid, right? 5.2 million e-wallets, 2.6 million debit cards, which is double 5 years ago, 21 PSIs, a lot of the folks in this room and online. Internet penetration, robust economic growth. All of that, I think, is quite impressive for those who are actually part of that 60%. But for the remaining 40%, I think we have a lot of work to do. In essence, when it comes to fintech and financial inclusion, we think there are 5 ways in which one could be leveraged off the other. The first one is, what are the ways in which fintech could allow banks and the financial system to better use data for credit assessment, for preventing over-indebtedness, for credit, understanding unmet needs for their customers. That's number one. Number 2 is it's a more efficient and more cheaper way for banks to run their operations, but also for consumers to transact. Number 2, it's about the convenience of having multiple access points, whether it's a gateway, whether it's a merchant platform, to have all of that within one ecosystem. That's going to be quite valuable for the network and for the customers. 4th is the interconnectedness between the banks, which we'll go in a lot of details on with the likes of Bakong and all the initiatives of the ABC, but also within amongst the banks themselves. And number 5 is the MSMEs. So now I'll go to 10 trends that's we think is shaping up the fintech industry. Why 10? Because it's an even number. It's a nice number to go. We could probably live with 7 because some of them overlap, but let's go for 10, right? The first is the digital channel, or put it simply, the mobile apps, the banking apps. So now, maybe a few years ago, those mobile apps are kind of exotic, nice to have. Certain banks have it, certain don't. But now it's a competitive imperative for banks to actually have one, right? So at the moment, there are 20 banks that have some form of mobile wallet or mobile banking platform. So the data that we extract from the public information out there is, for example, if you look at ABA versus 2 years ago, their registered users have gone up 5.5 times. We think that number is probably going to double for the next foreseeable future. Same for Aklida, so it's not a bank-specific growth. Aklida, you see a pretty impressive number, 4 times. And even more impressive, and I don't have the data to back it, and if you're a bank and you want to send us the data, please let me know. But from a per-user transaction volume, I suspect it's much steeper curve than these 2. So that's kind of a must-have for banks, I think, or even wallets or money transfer businesses. So how should we leverage this phenomenon to either encourage more people to come onto the financial services system, or how do we encourage those who already have a footing in the door get in deeper with the system? Well, there is a general trend because of this, and partially because of this, to be less reliant on branches. And I think, as some of our banking colleagues know, sometimes you have rural people who would go into the bank, they take off their flip-flops and leave it outside because the banks are typically so nice and beautiful, it's intimidating. And that's the kind of customer experience that you don't have to necessarily go through if there's an application that could displace a lot of the branch operations. Banking customers who, this is a trend that we see, is that banking customers who have some form of savings are more likely to use it for other things, applying for loans, opening another accounts, and things like that. So that's a gateway for further and deeper financial inclusion. Typically, for the banks who have their own IT autonomy that doesn't necessarily have to answer to overseas headquarters, they're much more able to adapt and build new products, build innovative new products that will meet the needs of their specific targets. So we think that banks who have that, that's a luxury to have, and it's certainly something that propels their growth. Trend number 2 is the strategic partnerships between the banks. So as I've been told, many people who have been in the banking industry for a while realize that before, the banks really don't talk to each other, and being in the same room like we are here today would be more or less discouraged or unheard of. But that's not the case anymore. We see that the banks are working very well together. Even with the fintechs, even competitors are in the same room together. So that's one aspect. So if you go to the next slide. And this is a picture of everybody in this room, shaking hands, working together, smiling, living, working happily ever after, which is a trend that we want to continue, right? It's a good thing. Maybe the next slide. And similarly, it's not just the banks, it's the PSIs, but it's all about integrating the merchant network, the consumers having the ability to freely transfer money from one point to another. And so that's this chart is way too complicated for what it is, but it's basically saying just, now money could free much more freely. And for the customers, it's about the accessibility of their money. It doesn't matter if I have an AMK account or a Canadian account, my money is still my money. I could use it in whichever way I want. It's not going to cost me a lot. The banks don't lock in their customer per se. There's different ways in which they could spend the money online, offline, and so on and so forth. So the value of being in this formal system is increased because of the lack of friction. Number 4 is probably one of the more discouraging trend in this presentation regarding financial inclusion. It has to do with the attitude that people have. The attitude that people are now thinking that money is not this physical piece of paper that I have to go and hand it to my neighbors if I want to buy something, or to a physical bank for it to be protected. So that mental and that psychological trend we're seeing quite a bit of lately. Various food delivery companies, as you've seen with COVID, have increased their volume 3-4 times. And the surprise is that it's not just COVID. Even now during post-COVID, that volume is still quite sustained. And so, maybe COVID is the catalyst that allows people to trust this platform more, but it's more of the fact that now they're comfortable using it. So that's quite an encouraging sign as well. Number 5 is the MSMEs, and I want to emphasize the first M, the micro merchants and sellers, because if they really are the bloodline of this economy, and if you could somewhere include that and convince them to be part of the formal system, you have a lot more people, individuals behind that. And so, the MSMEs are going through their own digitization. So we have Banji, for example, who's helping the accounting and the financial management of those companies using their platform. We have a lot of merchants going online, live selling online, finding a bigger audience. And so that's happening. I want to also highlight another initiative with PPCB, for example, whereby working with Banji to access data from their clients to allow unsecured lending, which is, I think most people would agree, this is very much needed. But for small companies with little credit history, little documentation, little asset, it's very, very difficult to access the banks and bank loans, right? On the bank side, how can you allow that and still manage risk, right? So there has to be some innovation in place that address that issue. And I think that's where fintech could really accelerate in financial inclusion. Number 6, it's not really a trend, but everybody's going on the cloud. Uh, so, the insights here is that with the cloud, it's theoretically allow you to be much more flexible in terms of coming up with new products. It's relatively cheap to store and access data. And so, if that is a way for banks to cut down their costs and hopefully pass on that savings to their end customers, that's a main value proposition. QR payments, I think, again, it's going to this theme of level the playing field, making it easy for various people to accept and pay. Number 8 is eKYC. Now, it's not a new thing. I mean, PiPay has done it since you've launched, right? Other wallets have done it where for small amounts of, for small wallets, it's relatively easy for people to take pictures, submit documents, submit IDs, and whatnot. But we think that there's a lot more potential for technology to have a more reliable role in this process. For example, using biometric information, anti-fraud detection, and maybe even further down the line, an integrated way to have a national ID system built into that. And of course, eKYC for small wallets is okay, and they shouldn't replace a bank KYC, but it's a Trojan horse. It's allowing the people, if possible, to access their first savings account, which could be built on, right? That's where the financial inclusion could come in. So it's not new. This is 8.1, I guess. But eKYC is something that's already been put in place by other national banks, ranging from a sort of sandbox program from the Bank of Thailand to a more entangled National Bank of Singapore, where national ID is a part of that. So we're probably going to head that direction soon, I hope. But there are various players like Spin, Loi, or Click that's trying to focus on that component. So we'll see how that works. Number 9 is Bakong, and it's not an ABC, it's not a fintech meeting without saying the Bakong, mentioning Bakong. But theoretically, again, this is reinforcing if it works in the back end where banks are allowed to freely transfer money and real-time settlement. If there is less friction, and it's cost-effective to transact through Bakong, then the customer should be the one that's winning. And the last trend is on the M&A side. We've been saying that, look, you have the market of this size and you have 21 PSIs, you have 30,000 settlement agents, 15,000 merchant locations. In other markets, the payments environment is largely an oligopoly. And so at some point, one way or another, we're probably going to head that direction. And that's going to be done through M&A. So ultimately, competition, I think Chanda has this slide, competition's good. But sometimes too much competition prevents platforms from having scale. And when you don't have scale, everything's going to be expensive. And if everything is expensive, then you have to charge your customers. And so that's kind of the other side of competition, or too much competition, right? So if at some point there is less competition but more efficient competition, then perhaps ultimately the customers win again, because now they are able to access those services at a lower cost. So in all, I think where we see the value of fintech innovation in financial inclusion is largely through credit policies, credit assessment capabilities, extending access, removing friction, innovative new products, eKYC. So all of these things are technical solutions. Now, we still haven't addressed the the most important part, which I mentioned in the beginning, which is how do you convince people to put $50 of their only saving in the world into this nebulous application or a bank? That takes longer, and that's not something that is the sole responsibility of a bank or a fintech. It's very much a complicated multi-stakeholder approach, right? Thank you. Oh. So if you don't have a copy of this report or want a copy of this presentation, please let me know.
Thank you for a great presentation with such interesting data to learn from.